Friday Fluff recap. It's interesting times to be alive, that's for sure. Let's get into the fluff.
Wake up every morning, can't get you off my mind. Oh, you know I got bad habits and they keep me out.
High mortgage rates paired with high price and tight inventories could cause home sales to drop 9% from last year. Redfin shares are down roughly 69% from the year. Zillow's down 33%, and Open Door has lost 45.2% compared with the S&P 500's 9.8% decline. So home prices have risen roughly 34.3% during the pandemic, and that's according to the S&P CoreLogic Case-Shiller National Home Price Index. So the average 30-year fixed mortgage rate, which surpassed 5% in April, is currently sitting at roughly at 5.220% according to Bankrate. It's up 2 percentage points in recent months, according to Freddie Mac data. So only 30% of adults surveyed think right now is a good time to buy a house. That's down roughly 23 percentage points from last year, according to the Gallup's annual economy and personal finance poll. So roughly just 25% of adults ages 18 to 34 said now is a good time to buy. That's down from 42% last year. So median sale prices of U.S. homes reached roughly $428,000 in April. The Gallup poll found 70% believe housing prices will rise over the next year, with respondents in the West more inclined than those in the Midwest. So Airbnb co-founder CEO Brian Chesky warned, take a look at this. This moment feels similar to late 2008 when we started the online marketplace for lodging. So he has an ominous prediction. Interesting thoughts. So if we kind of look what's going on across the country, pull some data on what certain cities and what's going on in sectors from builders. Washington, D.C. builder traffic, half of what it was in March, worried about first-time buyers. Many fewer real buyers than the number of people collected on interest list during the last 6 months. Certainly more attempts from buyers to negotiate now. They're trying to negotiate. A Seattle builder, pause by a large population of buyers. He said, to achieve our desired sales pace, we had to make price adjustments. Rates started to knock people out of the qualification process, he said. Riverside, San Bernardino builder, cancellations are starting to creep up due to loan declines and job losses. Waiting lists are certainly smaller. What he's seeing, he said he saw immediate change in buyers' behavior when rates roughly climbed over 5%. That's pretty much across the board. Adjustments have been made from builders. If we look in the Los Angeles area, some builders, Los Angeles builders said, stretching of purchases have become more cautious. People, a little more cautious right now in stretching. San Diego builder, buyers are definitely a bit more edgy right now. So what's next? Soaring home prices mean more first-time home buyers could be priced out. Bottom line, some of Zillow's data, they said the share of first-time home buyers dropped to 37% in 2021 from 45% in 2019. Its recent poll found that the share of first-time buyers won't return to pre-pandemic levels until their data 2024 at the earliest. So if the Federal Reserve wanted to support the housing market, right, it would keep interest rates low. But the Federal Reserve has, decided not to do so, and record inflation. I've always argued that interest rates should be higher in a healthy economy. But is it a good time to do what's going on right now with the record inflation? Instead, the Federal Reserve is recklessly raising interest rates because it is so scared of inflation, which they called transitory for over a year, which it wasn't. The writing was on the wall. Reckless printing. Reckless printing. So, on a good note, I want to end the housing discussion on a good note. Despite these early signs that the market is slowing, there's some cracks. It still feels as hot as ever for home buyers when you look across the country, not just in California, with new records set for home selling speeds and pace escalations based on data going back to 2015. Look at the big picture. 45% of homes that went under contract found a buyer within 1 week, and the average home that sold went for 2.4% above its asking price. People were thinking, what they're seeing now is if it's on longer than just a week, they get skittish, and why is it on longer than a week? So stuff is sitting longer now. So you need to keep an eye on this. This all ties together with the next thing I want to talk about, jobs. U.S. companies added far fewer jobs than expected in April, suggesting tighter labor markets in decline. In decades has made it difficult for businesses to fill a record number of open positions. That's according to the ADP National Employment Report released, and that was released on Wednesday. So companies added 247,000 jobs in April, sharply missing the 395,000 gain that economists surveyed had predicted. It also marked a big decline from March when private employers added an upwards revised 479,000 jobs. So you got to look between the lines in the jobs report and how that information is calculated to get accurate data, folks. So the wholesale prices in the U.S. soared 11% in April from a year earlier, a hefty gain that indicates high inflation will remain a burden for consumers and businesses in the months ahead. Remember, it's transitory and only be a few months. This is very concerning. It's going to go through the whole summer. So the inflation data released on Wednesday jolted the markets, coming in at 8.3%. The rate declined for the first time in 8 months, but was higher than economists expected, right? So the Labor Department said Thursday that its, producer price index, the PPI, which, that measures, inflation before it reaches consumers. This is important. Before it reaches consumers, climbed 0.5% in April from March. This is a slowdown from the previous month, however, when it jumped roughly 1.6%. So, folks, everyone knows this. Inflation is out of control. It's out of control. And if you look at all the data from the 70s, in a lot of respects, it's worse. And that normally happens when the economy is overheating. But of course, the U.S. economy is not overheating. In fact, if the U.S. GDP falls once again during the second quarter, that will officially confirm that we are actually in a recession right now. There are some that have suggested that stagflation, a lot of people have talked about this, is a good description of the current economic conditions. And if you look at the charts and graphs, they're not far off from what they're saying. But the truth is that what we are facing, in my opinion, and what some top economists are saying right now, where we're at, is so much worse than anything that we've dealt with during the 70s. I hate to say that, but it's true. So the Bureau of Labor Statistics just informed us that the consumer price index is 8.3% higher than it was a year ago. Okay, so let that settle in. Inflation rose again in April, continuing a climb that has pushed consumers to the brink, okay, and is threatening the economic expansion. And that's according to the Bureau of Labor Statistics, and they reported that on Wednesday. So it's all backed up by data. So when we talk about this consumer spending and what's going on in the consumer segment, there's some stuff that gives me heartburn. The consumer price index, everyone talks about it. It's a broad-based measure of prices for the goods and services like I said, increased 8.3% from a year ago, higher than the Dow Jones estimated for an 8.1% gain. They were off. Most people don't realize this, but we folks are extremely vulnerable right now. And that's from my economist mentor. When the next major downturn strikes, where Americans are standing right now, millions upon millions of Americans will be instantly wiped out. Instantly wiped out. And according to a report that was just released, it was released, 2/3 of all Americans are currently living paycheck to paycheck. I did talks about this. So, is that the sign of a healthy economy when 2/3 of people in the United States are living paycheck to paycheck? As of March, close to 2/3 or 64% of the U.S. population was living paycheck to paycheck, just shy of a high of 65% in 2020. That's according to Lending Club report. So, the number of people, I'm just trying to wrap my head around this, the number of people living paycheck to paycheck today, in my opinion, is reminiscent of the early days of the pandemic and has become the dominant lifestyle across income brackets right now. And that's what data is showing. That's my opinion. And that's also from the Lending Club's financial health officer. So consumer debt, this is very concerning right now. When we got out of the pandemic, you think it would curtail, but consumer debt continues to climb at a staggering rate. Total consumer debt, let this sink in. Total consumer debt rose by $52.4 billion in March, a 14% increase according to the latest data released by the Federal Reserve. So outstanding consumer debt now stands at $4.54 trillion. This is concerning. According to Fed data, Americans opened 229 million new credit card accounts in the first quarter. 229 million. That was higher than the pre-pandemic levels. Okay? The Federal Reserve consumer debt figure includes credit card debt, student loans, and auto loans. But ladies and gentlemen, it does not factor in mortgage debt. When you include mortgages, the U.S. consumers are buried under more than $15.8 trillion in debt. $15.8 trillion in debt. So, a lot of data, a lot of micro, a lot of economists, but things are slowly moving in the wrong direction. We're giving $40 billion to Ukraine when 2/3 of Americans are living paycheck to paycheck. You have 10 more million people that went into poverty due to COVID-19. A lot of people did not come out of poverty. We're seeing rampant increase of homelessness, fentanyl deaths at the border, all these things that are going on. And we're giving money to secure borders in Ukraine. Surveys have been done. The number one thing that Americans are concerned about right now is inflation. And that's what they're going to go to the polls for, is inflation. And can they put food on the table for their families? Baby formula. It's interesting if you read into the data what's really going on with that. And we all know that the $40 billion will not go to the Ukrainian people. It will go in the pockets of lobbyists, special interests, the military-industrial complex for getting contracts for weapons. Okay, you can make an argument, but what are our interests over there? Americans don't seem to be interested in Ukraine. They just be concerned what's going on in this country. So we have a huge inflation problem. Consumer price index is up. People are blowing up their credit cards again now. So when you look at all these signs, it's very concerning. Housing market is still looking pretty good, but there are some cracks. And make sure you're honest with your clients and what's going on. But it doesn't matter as an investor. Let me say this. It doesn't matter what the economy is. There's always buys out there. If you're an investor, if you're trying to help clients buy a home, I don't care what's going on. There's always, when you look across the country, and if you're a global investor, there's always opportunity. And there's always opportunity. Whether it's foreclosures, and I'm chopping at the bit at that, and I'm watching that data, whether it's negotiating for a client and find them a multifamily building and get them a deal, or whether it's working with a first-time buyer. It's important you look at the micro data, whatever market you're in, and provide honest, sincere data for your clients. That's your job, and your job is more importantly to know it. Know it, and not fly by the seat of your pants. 90% of real estate professionals are glorified couriers. They don't know what the hell they're doing. So that's the data right now. We need to keep an eye on it, but there are some signs and some concerns. This inflation is way out of control, and I'm concerned what the Federal Reserve is doing. Have a great weekend.